Welcome back, Focus Learners. Today, we are doing a deep, entirely objective dive into the highly polarizing and always provocative financial philosophy of Robert Kiyosaki. Now, whether you revere him as the undisputed godfather of modern personal finance, or you seriously question his unconventional tactics, there is absolutely no denying one thing. His ideas force us to completely rethink how we view money. In this explainer, we're going to break down exactly how he connects massive, high-level geopolitical shifts directly to the cash inside your wallet.
Okay, let's dive into this. To truly grasp Kiyosaki's controversial personal finance tips, we first have to understand his macro view of the world. We'll be looking at this shifting world order, his definitions of real versus fake money, the famous cash flow quadrant, his wild strategy of using debt as an asset, and finally, the capitalist mindset you'd need to pull it all off.
So, starting things off with Section 1, the shifting world order. According to Kiyosaki, we aren't just in some regular economic cycle right now. We are literally living through the biggest shift in world history. He sees this massive impending battle between the East and the West. Just think about the sheer demographic contrast here. You have Western nations, mainly North America and Europe, which rely heavily on the US dollar, representing roughly 1.2 billion people. But on the other side, you have the rising BRICS nations. That's Brazil, Russia, India, China, and South Africa, representing a staggering 3.8 billion people. And he makes a point to highlight that India is sitting right in the middle of this massive global tug of war. He argues that these high-level political decisions aren't just news headlines. They have an immediate, severe impact on the average person. Take this for example. Kiyosaki, who actually owns oil wells, notes that when the U.S. government halted the Keystone XL pipeline, the oil he was selling skyrocketed from $30 a barrel all the way to $130 a barrel. He views political actions like this not just as, policy shifts, but as moves that intentionally make basic survival so incredibly expensive that it effectively wipes out the middle class entirely. And that geopolitical tension brings us right into Section 2, real versus fake money. Let's see how this builds, because Kiyosaki has a heavily debated and super strict definition of what money actually is. To understand why he considers traditional currency fake, we just have to track the timeline of the US dollar. Back in 1971, President Nixon took the dollar off the gold standard. By 1974, it transitioned into the petrodollar. Fast forward to the 2020s, and we are seeing just unprecedented, off-the-charts money printing. Because fiat currency is no longer pegged to physical gold or silver, Kiyosaki argues that the cash in your wallet is essentially an illusion. It only exists because debt is created. So what does this all mean? If traditional fiat currencies like the US dollar, the yen, or the rupee are quote-unquote fake money that governments can just endlessly print to fund themselves and fund wars, causing inflation that just eats away at your purchasing power, well, what does Kiyosaki actually consider to be real? What is his ultimate inflation hedge? For Kiyosaki, real money has to be tangible or mathematically finite. He calls gold and silver God's money. And listen, he doesn't just buy a few gold coins here and there. As a true capitalist, the guy actually owns the Trixie gold mine. He's been accumulating silver literally since he was a kid. He also heavily invests in Bitcoin, which he likes to call people's money, noting that he scooped up 60 coins when it crashed to just $6,000 each. No way, right? And finally, oil. But again, he's not logging into a brokerage to buy oil stocks on Wall Street. He owns the actual physical oil wells in states like Texas and Louisiana. Now, knowing what to buy is really only half the battle. Next up is Section 3, the cash flow quadrant. This is how you earn your money according to his famous ESBI framework. Let's break it down neutrally. E stands for employee, someone who works for a paycheck. S stands for smart or self-employed, think doctors or lawyers. B is for big business, the people who create systems and put major deals together. And I stands for insider or investor. Now, Kiyosaki proudly operates exclusively on the right side of this quadrant as a B and an I. He points out that billionaires like Elon Musk or Ratan Tata operate strictly in these two categories as well, meaning they create systems rather than just trading their time for an hourly wage. Now, what's really interesting about this slide is how Kiyosaki links these exact quadrants to taxation. He makes the highly provocative claim that the tax system is inherently designed to punish the E and S quadrants. I mean, employees might pay anywhere from 40 to 60% of their income in taxes. Meanwhile, the system heavily rewards the B and I quadrants. Big businesses might pay around 20%, and insider investors,
Well, by utilizing debt and tax incentives legally, they can often bring their tax rate all the way down to 0%. Zero. And this perfectly highlights the core juxtaposition of his entire philosophy, the traditional teachings of the school system which he attributes to his poor dad versus the capitalist teachings of his rich dad. Traditional advice tells us all to go to school, get a secure job, save your dollars, and invest in a 401k or some mutual funds. Well, Kiyosaki completely rejects this. He argues that saving fiat currency makes you a loser in an inflationary system, and that escaping that traditional employee mindset is the only real path to true wealth. Which leads us to perhaps his most controversial financial strategy. Section 4, Debt as an Asset. While practically every traditional financial advisor out there is telling you to aggressively pay down your debt, Kiyosaki believes taking on debt is exactly what the wealthy do to get richer. To wrap our heads around this, we have to look at his incredibly strict definitions. To Kiyosaki, an asset is simply something that puts money into your pocket every single month. A liability is something that takes money out of your pocket. This perfectly explains why he famously and controversially insists that your primary residence, the house you live in and pay a mortgage on every month, is a liability, not an asset, because, well, it doesn't generate cash flow for you. And this brilliantly illustrates how he puts this into practice. He basically translates a simple childhood board game into a massive real-world strategy. It's the Monopoly strategy. Step 1, you borrow debt from banks, often leveraging international savings. Step 2, you use that debt to buy cash-flowing real estate, your green houses. Step 3, as those generate income and appreciate, you trade up to larger properties, your red hotels. And finally, Step 4, because governments offer huge tax incentives for providing housing and creating jobs, you pay zero taxes completely legally. Using this exact debt-leveraged method, Kiyosaki has acquired an astonishing 15,000 rental properties. Because debt is his tool of choice, he treats a market crash completely differently than the rest of us. It isn't a time to panic, it's a massive clearance sale. He notes that back in 2018, when real estate markets took a major hit, he literally went to his bankers with his strong financial statements and borrowed $300 million in tax-free money. He used that debt to buy nearly $1 billion worth of real estate at a steep discount. So while middle-class investors were panicking, he was aggressively expanding. But here is the catch. We've arrived at Section 5, the capitalist mindset. None of these tactics, buying gold mines, operating in the investor quadrant, or borrowing hundreds of millions of dollars, none of it works without a fundamental psychological shift. As Kiyosaki boldly puts it, the most important asset you have is the space between your ears. For him, financial statements matter infinitely more than college degrees. A PhD might look really nice hanging on your wall, but a banker only cares about your personal balance sheet. So what is his actual recipe for cultivating this mindset? First off, study constantly. And he doesn't mean formal schooling. He means aggressively pursuing financial literacy. Second, choose your peer group ruthlessly. He bluntly advises people to stop taking financial advice from poor professors or well-meaning family members, and instead, study and surround yourself with capitalists, people like the renowned investor Jim Rogers. Third, do not fear failure. Traditional school punishes mistakes, but in capitalism, failing is precisely how you learn. And finally, pick your game. Kiyosaki says he plays rugby, not soccer, meaning he strongly prefers the aggressive, full-contact sport of entrepreneurship. It's a mindset that totally transcends geography and circumstance. He strongly believes that today, a kid standing in the slums of Mumbai with a cell phone has the technological power to become a billionaire. But that technology is completely useless if the mindset isn't there first. As he brilliantly puts it, if your brain is poor, your smartphone is poor. Which leaves us with this final, truly critical thought. If Robert Kiyosaki's geopolitical warnings are accurate, if we really are staring down the barrel of a shifting world order and an impending global depression driven by the devaluation of fake fiat money, is your current financial strategy acting as a shield, or does it just make you a target? It's a heavy question, for sure. But answering it begins entirely with your own financial literacy. Think so